Hello, welcome to European Open Briefing for Wednesday, February the 6th. I'm Rafa Bayajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing further gains for the US dollar this morning, mainly on the back of weakness in its major peers. The dollar index is currently up by around 0.1%, but against the yen, it is struggling. It's down by 0.3%. The yen is up across the board this morning, mainly led by losses in the Australian dollar, which came under pressure following a surprise shift in tone from the RBA. Having a look at equities markets, we can see most Asian markets do remain closed due to the Lunar New Year celebrations. In Europe, though, we've got a negative start, despite the fact that on Wall Street overnight we did see some solid gains. European currencies are mixed. Sterling has steadied up marginally this morning following sharp losses yesterday. The euro, on the other hand, it has slipped further following disappointing German industrial orders numbers. The Australian dollar, though, is the worst performer this morning, down by around 1.5%, and this is also weighing on the New Zealand dollar, which is up by around 0.65%. We do have New Zealand employment numbers coming up at 21:45 GMT, so those will come into focus later on. This morning, though, we're not seeing much reaction to President Trump's State of the Union address yesterday, where some market participants were hoping for more evidence that the US-China trade talks are progressing. So the fact that he didn't really add anything new to that did lead to some disappointment. Though we do have a next round of talks in the US-China negotiations coming up next week. Those will be another high-level talks. This time around, they will be taking place in Beijing. But another thing that did come up from Trump's address was he did raise the prospect of another government shutdown as he continued to demand funding for his Mexican border wall. And yesterday we did see some somewhat disappointing ISM non-manufacturing PMI, despite that, though, the dollar index is up by is actually up near 1.5-week highs this morning. It's dollar index currently trading at 96.21. Looking now at the Australian dollar, we can see that those big falls earlier this morning. So yesterday, the RBA policy statement following the meeting there wasn't anything too different from the previous one. It's just somewhat somewhat less optimistic growth forecast. But this morning in his speech, the Governor Philip Lowe did actually indicate that the next move could be a rate hike. He said that while in 2018 the rate hike was more likely than a cut, now things are more equally balanced. So we're seeing big falls in the Australian dollar as he's opening the prospect of a rate cut by the RBA, which the market participants are already expecting. So that's mainly seems to be a catch-up rather than anything too new for the futures markets, at least. Let's now move on to European currencies. The euro is struggling once again. It slipped below the 1.14 level. Yesterday we had the market final composite PMIs showing that Eurozone growth was the slowest in 5.5 years in January, and this was followed up by disappointing German industrial orders. They've fallen for the second straight month in December, and we're seeing expectations of a 2019 rate hike by the ECB continuing to recede. Sterling is also struggling. It's hit a 2-week low of 1.2922 against the US dollar. Services PMI out of the UK was also bad yesterday. It pointed to stagnant growth in January, and this could mean the Bank of England tomorrow at its meeting will likely sound more dovish than the last meeting back in December. And looking at Brexit now, there's also the risk that Theresa May could once again be opening her party rift. She did manage to win the Brexiteers' backing for her Plan B when she promised changes to the backstop. Now she's saying that the only change she will try to negotiate regarding the backstop is a time limit. That may not please the Brexiteers, and this again once more has raised the prospect of a no-deal Brexit. But there are reports that the UK could be delaying Brexit by up to 8 weeks. So that's it from me. Thank you very much for watching, and have a great day.